practitioners, professors, and trade finance experts joining us all the way from Thailand about what is the state of international trade finance and how we can tweak or change rules to make it better. International economy determines international trade. International trade is greatly intertwined with international trade finance. Trade finance is the grease that keeps the wheels of international trade moving. And the numbers have already been quoted by the secretaries. The global economy is expected to grow at less than 3%. The IMF had to lower the pace of growth just in January, about 20 basis points lower than what they said in their previous meeting in October. And likewise, international trade volumes are also expected to fall to less than 1% after a decent growth last year. Therefore, the challenges are aplenty. Let me begin by actually stating that scenario, since we have the experts, to tell us what is the state of international trade, how important it is for the development of all the nations who are represented here, and then we come to the gaps in trade finance itself. So that Stephen Beck doesn't feel left out, I'm going to start with you, Mr. Beck. If you can lay the terrain for us, the importance of international trade finance for international trade and economic development. Over to you.
Many thanks, Latha. Very nice to be with all of you. Sorry I can't be there personally, but delighted to be part of this terrific discussion. And I'm delighted that it's attracted the attention of the G20 because it is critical. So to step back for a second, I mean, I think we all know that trade is critical for development. It's lifted millions of people out of poverty. But if we don't have sufficient financing to back trade-led growth, we're not going to be able to get the maximum development impact, the maximum gains that we can from trade. The United Nations Addis Ababa Declaration on Financing for Development identified trade finance as being critical to achieving the Sustainable Development Goals. So this is further sort of evidence around the importance of trade and financing, sufficient financing to back trade. But as has been pointed out, of course, there are substantial gaps. I mean, we measure, we estimate what those global gaps are for trade finance, and I think that figure was referenced earlier on as 1.7 trillion that we estimated a couple of years ago. That estimate was elevated to 2 trillion of a global gap back in September. But I think that we all know intuitively the gap is actually getting larger than that. One of the primary reasons for the gap getting larger is inflation. So where financial institutions have a country limit and a counterparty limit to support trade, the value of that limit to support trade has, in real terms, reduced, because now the value of a transaction in commodities or whatever it is has gone up substantially, and those credit limits, country limits, counterparty limits to support trade have not increased. In fact, if anything, a lot of financial institutions have reduced their exposure. So this is really exacerbated the whole sort of situation with respect to the gap, and it's something we really need to be concerned about because it is hitting at inclusion, our ability to grow and to reach our sustainable development goals. I'll leave it there.
Yes, I guess all of us are coming from backgrounds where this is greatly appreciated. As it is, the higher cost of commodities has made the available trade finance inadequate. Working capital cycles look big, working capital amounts look big, but the amount that's actually getting financed is perhaps less. And what's worse, along with inflation come rising interest rates, and that's making the terms of finance much more expensive. I'll come to the panel on, these cycles are inevitable and expected, and whether we can have institutions and practices which can forestall, which can prepare us for these cycles. But before that, since there's so much emphasis on MSMEs, let me straight away start over there. In India, for instance, the MSMEs, we use it as a short form for medium and small enterprises, are a very important contributor to our exports. I mean, handicrafts, textiles are huge employers of people and small companies. But yet, Exim data, which was prepared for this seminar, points out that 41% of the applications for trade finance come from MSMEs, but 52% are rejected, either for want of collateral or, probably because the terms are not met, they're too expensive. So let me come to that, Andreas. You've done a lot of studies on a lot of countries. Is this a common problem that small enterprises, either for want of collateral or for their inability to meet the very high standards of compliance, money laundering, is this a common problem that other countries encounter?
Yeah, thank you very much for the excellent question. And unfortunately, the answer is yes, it is a common problem. So we sometimes think that the challenge of financing gaps is mainly for least developed countries or emerging markets and developing economies. But the reality is, when I look at Finland, at Denmark, at Germany, at a lot of highly developed countries, there is a significant gap as well for SMEs regarding financing. And of course, this is a big challenge because you just mentioned that SMEs are the backbone of the economy. They are most innovative drivers. We need them for the just transition to net zero. We need them for innovation. And there are a couple of problems behind. ChatGPT was able to answer a couple of the questions, but unfortunately didn't give proper answers. I think the answer is, of course, there is a reason for that, why commercial banks are not able to serve SMEs in a sufficient and good manner, because the regulatory issues, anti-money laundering, know your customer. I mean, it's a challenge they have to cope with. It is something they have to do because we know all the bad experience in the past, so we can't blame them. I totally understand that, why commercial banks are reluctant regarding MSME finance. Of course, it's a challenge as well regarding the changing business model of commercial financial institutions. It's the previous buy and hold strategy more to an originate and distribute model, which is the practice in commercial banks, in particular in the big banks. So the solution is, in many countries, that governments must step in. ECGT, Exim India, there are solution-oriented SME support tools. And the same applies in other countries as well. And when we think about trade financing, it is quite important that we are not too narrow. Trade finance is not only post-shipment supplier credits. It's not only letters of credit. You mentioned working capital facilities. They're absolutely key for them. Even more, it's innovative financing in the innovation phases, is capital expenditure financing, and it's also the medium and long-term export financing where SMEs need that support. Governments can step in, they do that, in many times in a sufficient manner, but it's a global problem which has been much more relevant since the global financial crisis, the euro crisis, the COVID crisis, the poly crisis. We could speak about crisis all the time, and one of the solutions, the keys from my point of view, is a government intervention which is in line with international rules and regulations and global standards.
Government intervention, I guess the ECAs are set up for that, and likewise multilateral. I would hope multilateral banks, ADB is with us, whether they can provide solutions for spaces where commercial banks are not able to oblige, either because of their shareholders or because of regulatory demands and anti-money laundering rules. But, you know, in India, we hold a great hope that digitalization is going to be the answer. What do MSMEs lack? I'm given to understand that their biggest lack is collateral. And digitalization hopefully will give MSMEs some financing, some trade financing because of the cash flow. When in India, GST has done extremely well, and it has left behind a network, a footprint, which probably enables banks to guess what the flow of finance will be. So, Gaurav, that question to you as the banker. Has the GSTN already given you enough data, or is there enough other kind of payments data which allow for not collateral financing, but cash flow financing?
Absolutely, Lata, and a great question, because the future, as we all know, it belongs to digitization. And it really helps in reducing the overall cost of a life cycle of lending to any client, be it MSME or a large corporate. I think the biggest challenge for banks is MSMEs are located all over in remote areas, and the cost of accessing them, the cost of onboarding them, then the cost of compliance, and the cost of credit monitoring creates a huge amount of work. And if you tend to do it physically in the routine way of paper-based way, no bank is having that capacity. So one model is you have specialized finance companies who would lend to them, and then banks are refinancing them. That's the old traditional way. But coming to your point, digitization, it has really, removed the friction in the entire process, the life cycle. The onboarding of a MSME, for example, with the courtesy of the India tech stack, which is one of the biggest across the world, has helped in reducing the time which is required to onboard a MSME or a borrower. Because of the entire demographic details available out there, because of all the financial data which is available out there, it has really democratized. We heard that word, right, in the opening remarks. So this is what is making it happen. And this is all through API, which is all tech-driven, and banks are able to onboard clients. Let me give you an example. So supply chain financing is a big focus area for us, wherein we help our large corporate clients to bring financial efficiency in the entire supply chain, right? There's a physical supply chain, but that doesn't work unless there's a financial supply chain which is well-oiled. And that's where you have various MSMEs who are, part of the distribution network or the supply side network. And that's where we are looking at all this tech data, the tech stack, not just to onboard them, but also look at, can we set up limits on these borrowers in a very different way? The traditional way of lending to MSME is to look at the financial statements, which is prepared once in a year. Most of the times, these things may not be audited on time because these are small businesses. And therefore, it becomes difficult for any traditional commercial bank to take a credit call. Now, how do you address that?
Are you able to take cash flow financing calls?
Absolutely. So it's the flow-based funding, which is more real-time. The financial statements would still be dated 31st March. You are sitting in December, but you are relying on that. So it's the real-time GSTN, for example. Now banks can access the GSTN data, obviously, if the borrower authorizes them. Then there is customs has created IDPMS data, EDPMS data, which is all single source of truth, so to say. So it is not just helping banks in bringing the efficiency, but also reducing the fraud risk. And that is where, it brings a lot of comfort, reduces the transaction cost to really, go out there. And we are working on a model wherein we would be able to lend to the entire distribution chain, for example, of a large corporate by looking at the data, that would demonstrate the strength of relationship that is happening between both of them. That data will tell us how frequently money has been paid back, whether there are any returns, what is the volume of purchase made, and it's all coming from single source of truth, which is, let's say, GSTN network. And this is what is changing the game. And I think there are several, and we'll talk about that, but technology is something that will change the game, that will eliminate this gap. It has that potential. But there are certain drastic steps, including, buy-in from all the stakeholders, including regulators, investors, borrowers, lenders, the entire ecosystem.
Gaurav, I wanted to ask you, we've been talking about financing for exports, working capital financing or pre-shipment credit. What about invoice financing? What about TREDS? India has put in an exchange where you can go and, submit your invoices, and if the organization is a reliable one, the intermediary will encash it for you. I think the secretary spoke about it. So how is that working?
Yep.
Factoring, TREDS, invoice finance.
Like we are in various countries, in one of the very large economy, we have really cracked the deep tier financing model using blockchain as a technology, wherein, the solution actually passes on the payment risk of the big, large client down to the lowest tier of supplier. So for example, if you have a large automobile company, which is procuring, let's say, steering wheels from a tier 1 supplier. The steering wheel manufacturer is, let's say, procuring a steel rod from a tier 2 deep tier supplier, and the steel rod manufacturer is, let's say, buying scrap from a tier 3. Now, the challenge is that the large automobile company will always have adequate funding at a very low cost because of the large balance sheet. The tier 1 guy would also have a decent amount of funding because of direct receipts that it will have from a large automobile company. But what about tier 2? What about tier 3? Their buyers are not of that great credit quality. Where is the transparency? Now, using blockchain, we've been able to bring transparency, establish the linkages, and by virtue of that linkage, that this scrap supplier is not just any other scrap supplier. Actually, the cash flows are coming right from this large automobile company in a way. And if you are able to bring that transparency, visibility, you are able to reduce risks and therefore bring down the cost, make finance available to the scrap supplier. Otherwise, scrap supplier would have been, in India case, borrowing at, let's say, 16%, lots of collateral. Now, the guy can borrow at 10% in the India context without any collateral. That's the efficiency. Yeah, you would like to add?
Go ahead.
No, I just want to add one comment. I think when we speak about all the digital solutions, it's a lot of buzzwords all the time. And of course, we can think about that OpenGPT saves the world, etc., which it will not do, I'm pretty sure. But anyway, I think one of the big advantages of digital technologies in trade and trade finance is really that you can show and give evidence how to reduce the risk. We know that the non-performing loan rates, etc., I mean, are extremely low for trade finance, below 1% if you think about export or import loans, below 0.05% if you think about export letter of credits, etc. But if you use, for example, artificial intelligence, if you use machine learning techniques like random forests, you can show with all the data that the prediction of claims or the prediction of losses can be really used with artificial intelligence. We have done a big research project on that recently with a lovely publication nobody wants to read, I'm sure, but if you are lonely and have nothing to do on the weekend, I'm more than happy to share that. So I just want to say the digitization stage is really very diverse, from a starting point, how to access MSMEs, how to use applications, how to do credit modeling, how to do analysis and underwriting, until at the end, how to use with claims and recoveries. So I think we need the broader picture, and we really have to move away a bit sometimes from the buzzwords to the real opportunities of fintechs and insurtechs, because the potential is significant in that.
And just one more. Because you talked about NPCI and successive payment, I would just like to make a mention of ONDC, which is coming on the way. And that would be something on the trade side, which would bring democratization of MSME accessing various things. And I think that's where potentially banks, financial institutions have a role to play, because while ONDC would provide access to SMEs, through various buyers, but banks should also partner in the network to provide relevant financing. And that's when the physical supply chain and financial supply chain will chime in with each other, and that is where we will see the results. One more thing.
Okay, for those who are not aware, ONDC is an open network for digital commerce that's underway in India. I'm just referring to the foreign delegates. It's a promise. You have to think of it like an open source Amazon. Hopefully it's a marketplace where just about any shopkeeper can get in and do digital commerce. So you don't need to develop your own software, proprietary software that Amazon has. This is a public software, a platform available in which everyone should ideally be able to do digital commerce. It's in early stages. And that's my point, really. All of you have used the words, the possible positives from digitalization. It is not here yet. Is it yet to arrive?
I think a lot of that has been delivered. And Steve, please jump in. I see a lot of that has been delivered, but the opportunity is humongous. And, the ideas to leverage that in one way or the other way, it is actually getting built upon what you are doing. So using technology you have delivered in
Will Stan Chart's balance sheet have like 50% loans to MSMEs? Or will it still be large corporates? It's going to be large corporates, right? I'm just saying that it is still a promise which is to be delivered. Stephen, what's your sense? Have the advantages of digitalization been delivered, or are we still talking about it as a promise?
No, we're way off. Okay. The physical movement of goods across borders is still a very analog process, right? It involves physical paper, some 30 documents that are required to ship something, physical good, across borders. It's ripe for disruption, and it's really impeding our ability to generate more growth in the economy, to drive transparency through the economy, so that we can do a better job of detecting trade-based money laundering and the like. It's impeding MSMEs from entering the sort of realm of trade because of the complexities and so on that the Honorable Minister referred to in his GP chat search. So to digitalize that process would be transformative in the history of trade. So we know what needs to be done to digitalize trade, and we should be able to get this done by 2026. So on the one hand, we need to digitalize those 30 documents. Digital Standards Initiative that's bringing together the exporters, the shipping, the ports, the customs, the warehousing and logistics, and the importers to agree on the digital format of those 30 odd documents that are required. So that's being done. But it might come as a shock to the audience to know that, in fact, there are very few governments in the world that have legislation in place that recognizes those digital documents for trade. And so right now, it's not possible to digitalize global trade because the laws aren't in place. But the United Nations has created, UNCITRAL has created some model laws that enable the digitalization of trade because it recognizes these impending sort of digital documents. And that really is the crux of the proposal to G20. If G20 would agree that by 2026 it will implement legislation that's aligned with this UNCITRAL sort of model law to recognize digital documents, that would be transformative and unlock the ability to generate all that transparency, digitalize global trade, have all of that metadata to help close information gaps that contribute to the financing gaps on MSMEs. This is not a controversial proposal. I think all governments in the geopolitical sort of spectrum are supportive in theory, but we need to just move this forward. So as an action plan, I would appeal to the G20 Trade and Investment Working Group to have G20 agree that by a specific date it will implement this legislation. It would hit at the major themes of inclusion, MSMEs, growth, and resilience in value chains. Thank you.